Howdy there, folks. Welcome into today's video. We're going to talk about something very interesting in this video. I want to react to this one here today. Retail investors are plowing money into the market. This actually came out on July 19th, this video, but I think it's important to react to because there's this debate about the stock market, and essentially there's a belief that if retail is putting money in the market, right, then that means essentially we're nowhere close to a bottom in the market, and basically it's a false belief, but there's a belief that retail always has to lose in different situations, right? And what I personally believe, and I want to get into this a little bit and show you guys, but I believe retail is actually much more sophisticated than they've ever been throughout history. And I believe retail understands there's certain dynamics at play here, and they just understand these things on a much higher level because there's actually much more access to information than there's ever been before. And there's also this old notion that old money is like smart money, right? Or that essentially, let's just call it Wall Street, right? There's a belief that like they have some massive advantage and they always win. When in reality, we're seeing these folks lose time and time again. And many times, many of these hedge funds can't even outperform the market. They're underperforming, right? So I think a lot of these false beliefs are starting to slowly be torn apart in the market, in my personal opinion. And these stereotypes that are thrown out there all the time are slowly being torn down in the stock market. And like anything in life, there's stereotypes, and there comes a time when those stereotypes are broken. And I think we're going through one of those time periods right now.
Peaked back in November. There's widespread memes about how much people have lost in the market. How's the retail public with their feelings about or their exposure to the market these days?
A lot of them are plowing money into the market, and they're not slowing down. We saw retail investors buy a record monthly sum of U.S. stocks and ETFs this year.
Wow.
And that pace, although it's slowed a little bit, it's still well above pre-pandemic levels. I think a lot of investors have seen how stocks rebounded after the financial crisis.
There's a problem here, okay? First off, when they talk about retail investors, here's a big issue. You want to talk about retail investors. A retail investor could be anything from Johnny, who's just getting in the market and he's like trying to figure this stuff out and he's got $700 to his name. A retail investor could also be myself that has many millions invested in the market and has been doing this since 2008, right? So I was called a retail investor back when I was first starting in 2008, 2009. I had a net worth of less than $1,000. I built this massive fortune, obviously, over the past, let's call it 14 years, and I'm still a retail investor, right? So there's like levels of sophistication in understanding of the market and understanding of stocks and these sorts of things. But the silly thing is everybody's just grouped into retail. And it's like, okay, what retail's actually investing in the market? Because what I have seen as somebody that's probably more tied in with retail investors than just about anybody literally in the world, right? What I've seen is a lot of the folks that were gambling are long gone. Those folks left actually in 2021. They're long gone now at this point. And the last bit of those have left this year, essentially. The only folks I see left in the market are retail folks that are really long-term investors, or maybe they're traders and they're doing that sort of thing, right? But they're much more focused on the market on a higher level. And a lot of that gambling money is long gone out of the stock market. Now, you got just kind of the real players who actually care about this for the next 5, 10, 15, 20 years. And that's about it. That's what I personally see in the market. And I've been in this, I've been on YouTube since 2016. So I've been tied into retail since 2016. And I've been in the market since 2008, 2009. So I've seen quite a bit in my time. Let's just put it that way. And that's what I personally see.
During the COVID crash, and they're saying, I'm going to try to keep a steady hand here. I'm going to try to ride out the volatility. And again, my bonds aren't doing very well. I'm a long-term investor. Maybe I should just try to hang on.
That's really interesting because I'm sure, again, the sort of cynical reaction to that would be, okay, well, then that's a sign that we aren't at capitulation yet, that attitudes are still too optimistic. But we have seen, the AAII surveys and that sort of thing come down. So we also know a large part of their involvement was fueled by everything else being shut down, stimulus checks, and these kind of unique pandemic events. What is it that is keeping people involved in the market now, do you think?
It's funny, I spoke to one financial advisor this year and I was like, what are your clients telling you? Are they scared right now? He was like, I haven't really heard from them. They're not panicking right now. And he works with high net worth individuals. So he was saying a lot of people have seen their home prices appreciate. They've seen their stock portfolios appreciate over the past few years. They've made a lot of money the past few years, so they're putting it back into the market.
Oh, that's really interesting. I'm sure he must be breathing a sigh of relief. Maybe we all can, or maybe this just means another shoe to drop. Gunjan, thanks for your time today.
Thank you for having me.
Yeah, I mean, in terms
Shepard
of
Smith.
seeing, and I got some screenshots I want to show you of some stocks and things like that, right? In terms of this talk about another shoe to drop, another, let's call it the market going down even more, right, than what it previously down. NASDAQ was down like 34% at the lows in June at one point, right? And from basically its highs. It was either May or June. I think it was June when it was down like 34% or so. And S&P 500 got really ugly. The Russell was down about 34% as well. So those indexes obviously just sold off massively. In order to get the next, if we're going to get to even lower lows than that, what you need is complete devastation in earnings now at this point. Because how you got a 30% plus move down in NASDAQ, right, was fear. Now, if you're talking about even a lower low to the NASDAQ down 40%, 50%, you need massive deterioration in the economy in terms of companies' earnings just falling through the floor over the next few quarters. You need massive amounts of job losses. You need a great financial crisis type situation. That's how we got NASDAQ down over 50% in the great financial crisis, because massive amounts of jobs were lost and you had simultaneously companies' earnings fall through the floor. If you can get that sort of situation, we can get a NASDAQ down 40, 50%. We can get an S&P 500 down 40, 50%. But without that, you can't get that, okay? And so I think that's just kind of something important, right? And I spoke about the retail crowd, right? And I think the retail crowd's getting more intelligent than they've ever been because of the access to data and information that just hasn't been possible in the past, right? And also hearing perspectives from other people that are in the market and understanding the things to avoid and the things to go after, right? The NASDAQ, this is over the past 20 years. I want to look over the NASDAQ over the past 20 years and some of these stocks over the past 20 years, right? The NASDAQ's had many crashes, drops, drama time periods over the past 20 years. We know that, right? From the tech bubble to the great financial crisis to the 2018 drop to the Rona drop, and everything in between. It's had a lot of drama and a lot of reasons to sell, right? But the only people who consistently get screwed are the ones that sell, when the market's in a crash. The ones that consistently make out like bandits are the ones that consistently bought in the great financial crisis, bought when the tech bubble crash was going on, bought in the 2018 crash, right? Bought in the double dip recession fears of like 2011, right? Bought in the Rona crash. And in the 2018 crash and all the other ones, right? Those are the ones that ultimately make out like bandits in these situations, right? And so the retail crowd looks at these things. They understand, and I'm talking about the ones that are actually in this game for the long term, right? They understand this. They understand they're getting played. If they aren't buying during crashes, they understand they're getting played on just a higher level than I think any time period in the past, which is different, right? Look at this, right? This is Amazon stock over the past 20 years. The stock is up 45,000%. Amazon's had a lot of drama throughout its history over the past 20 years. And, the stock's obviously gone up so much over time. Some of these drops, you don't even see how major they were. But, these drops were insane throughout history, right? They just are little blips on the radar now in the chart, but these were massive drops throughout time, throughout Amazon's history, right? The only people that ever got played in Amazon were the people that sold that stock when it was in those drops, and they sold it when Amazon's crashed so many times throughout its history where the stock went down 20, 30, 40, 50, 60%. It's had so many time periods in the past 20 years where that's happened. And the only people that ever got played were the ones that consistently sold that stock, right? And people understand this game now. They see this, right? Apple stock is up 58,000% over the past 20 years. And Apple stock's had a lot of time periods when it looked all bad and when the market was going bad, right? And this stock even was crashing during 2008, 2009 crash while they had arguably the most important product ever launched from any company in its history. They had just launched at that point in time. The iPhone, right? Is an incredible new product, and that stock was crashing during 2008, 2009 as it was ramping that product. But that's a stock market for you. So retail looks at this and they understand, like, look at these stocks, right? Look at Microsoft stock. This is a poor performer compared to some of these stocks. Stock's up almost 1,000% in the past 20 years, 997%, right? And it's had many big drops throughout its history, but the people that got played are the ones that were selling, right? Monster, this is a whole other situation, right? A company I used to own back in the day, they used to be called Hanson's Natural Beverage, 113,000% gain over the past 20 years, right? And so during these market drops, I think the retail crowd understands that if they are not putting money in the market, they're making a big mistake, and they look at stuff like I think like I said, I think some of the retail folks I've met that would be called retail investors are far more sophisticated than Wall Street. And I mean, it's not even close. Some of these individuals, the way they look at things, the way they understand what's going on in the market, it's on a way better level than Wall Street. Let's just put it that way. Remember, a lot of folks on Wall Street are not even really that tied into the market in terms of like caring about what goes on in the market, right? A lot of Wall Street is sales. It's very much a sales industry. If you run a hedge fund, you're not in the investment business, you're in the sales business. You're in a business that essentially you want to manage more and more money, so you're trying to sell to clients on why, your hedge fund might hold up better than another hedge fund in a market crash, right? It's not always about outperforming and things like that for those folks. You and I, we might care about outperformance in the market, but for a lot of other people, they just don't. They care about preservation of wealth and those sorts of things. So, I think I think these stereotypes are ridiculous, and I think over the coming years, these stereotypes will continue to be destroyed. And retail has seen it too many times before, where every single time big crash happens, people panic, they say sell, 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 and at the end of the day, I think retail just understands if you got a big crash on your hands, you better be buying. Otherwise, you're just going to look back with regret. That's just every time we've seen throughout history. Like, you get a big crash, you got to be out there buying, and if you're not, you're just in a situation where you're like, why didn't I buy, right? And think about the dynamic we have nowadays. Where else are you going to put money? Real estate. I think real estate is really questionable over the next year. You could put money in a savings account and get your 1% a year or whatever, 1%, 2%. Is that really exciting? A CD account, something like that, 2% maybe. Or you can just keep cash. If I have an option of buying Meta stock, if I have an option of buying Amazon stock, or keeping cash for the next 5 years, gosh darn it. I think I'm going to put some money in Meta rather than keep cash for the next 5 years. I think Meta is going to do a little better than cash over the next 5 years. I think Amazon stock is going to do a little better than cash over the next 5 years. And gosh, if they don't, then man, we must have hit like 20% unemployment or something like that. Something crazy had to happen, right? So anyways, guys, hope you enjoyed this as always. I appreciate you guys joining me. I think this is maybe the 7th video in the history of this YouTube channel. I appreciate everybody that's subscribed to the channel. Much love as always. If you're looking to join my private stock group, get access to all my courses, get access to my private Discord chat, connect with everybody in there, all the 6- and 7-figure members and things like that, and myself, you can go ahead and apply. That will be pinned comment down there if you're looking to apply to join us in the private stock group. Much love as always, and have a great day.